All right, everybody. Let's go, let's go, let's go. Let us do this. Welcome, 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 welcome. Hope you guys had a good week. It's Thursday. It's almost the end of the trading week. Um, this is about the time where you should start taking stock of how your week has done or gone, what you've done, mistakes you need to correct, things you did well. Your journal should be full. I hope the week has been good to you. And as I mentioned in the session last week, your week can be good one of three ways. The first way is you got a boatload of trades, all of them were successful, you're so happy. That's a good week. Another way the week can be good is that you stayed away from that horrible trade that will have sunk your account, or you were disciplined. Errors you used to make, mistakes that you used to fall, traps you used to fall into, errors and mistakes you used to make. You were tempted to make them and you held tight, and you're glad you didn't. The third way the week can be good is you lost. Hopefully you practiced good. What's the word now? Risk management. Hola, Gerard. Hello, Esther. Hello, Kieran. Hello, Monica. You practiced good risk management, and even if you lost, you learned. You lost, but you could learn from your loss because you weren't crushed by the financial value of what you lost. Let me say that again. One of the reasons why, and this is probably a good place to start this evening. So I'm a little bit sniffly. I had something very spicy for dinner. So literally just before I came on. So the spice is all up in my nose. But one of the reasons why some traders who've been in the market even longer than I've been trading now 13 years this year. In July this year will be 13 years. So this is my birthday month for trading. The people who've been in the market twice as long as I've been, and they never become profitable traders because there's too much attached to their losses to learn from. Their losses are too emotional. They've over leveraged their account. They've given up too much in the way of risk. And so when they lose a trade, they can't have that honest, what's the word I'm looking for now? They can't have that objective, emotionless, what's the word I'm looking for now? Unsentimental. I'm still looking for another word. English isn't my first language, guys. Candid. I'm still looking for the word. Dispassionate is what I'm looking for. They can't have a dispassionate assessment of their performance because their losses have crushed them so psychologically that they can't take the time. I mean, looking at that loss is traumatic. But if you can't analyze where you went wrong, you repeat the same mistake over and over again. And that's why many traders are doomed to do just that, because they will not take the time to sit down and analyze their performance, or they can't because it's too psychologically jarring. So whatever you do, and this is probably a good place to lay that out, don't make that mistake. So tonight I thought, rather than show you a bunch of my charts, I thought I haven't done this in a while. I did a few of these last year with unbiased, right? That's another word, rational. Yeah, thank you, Kenton and Kieran. And so I did a couple of these last year, but I haven't done any for a while. Last year I called them the Traders Podcast. This year I'm calling them the Traders Lounge, because I want to save the name Traders Podcast for a different project where I'm going to bring in an experienced trader every so often, either somebody here in the Israel Keys team like Tuckbear or Joshua, or a couple of my friends who trade, You never know, I might get a mentor or two on if I can get a hold of them, just to talk about that. So that will be the Traders Podcast. But the Traders Lounge, once in a while, roughly once every week or once every 2 weeks, I want us to talk about trading without charts. Because too much of the focus sometimes is on learning that new edge, that new trick, that concept, that signal, that system, that strategy, that entry pattern, that, that golden or holy grail. That means you'll never lose again, and you make all the money in the world, and you be a millionaire, and you get the girl or the guy and live happily ever after. I'm sure you guys have figured out by now there's more to trading than that. Far more to trading than that. In fact, I'm of the belief that trading is 70% between your ears. Let me repeat that. I am firmly of the belief, and you cannot convince me otherwise. Let me repeat this. I am unpersuadably convinced, right, that trading is 70% psychological, mental, and emotional. Let me repeat that. Trading is, at least in my opinion, 13 years worth of that opinion, psychological, sentimental, and emotional. One more time. In my humble opinion, for whatever that opinion is worth, trading is at the bare minimum, and I use the word minimum here intentionally, at the bare minimum, emotional, psychological, and sentimental. And that 70% is the bottom 70%, not the top 70%. Let me repeat. That 70% is the bottom 70%, not the top 70%. In essence, you build your technical skill on the foundation of your psychological, emotional, and sentimental approach. It's not the other way around. It's not that the first 70% is technical, and then if you're good psychologically and emotionally, you take your trading to another level. No. Many people would be. I mean, it's not that difficult to learn the principles. Give me 12 months of your life, and I can teach you 90% of everything you ever need to know. You spend the rest of your life learning the last 10%. That will be your edge. That will be what separates the great from the good. But 90% of everything you need to be a successful trader, I can give you in 12 months. And I can give you in 6 months if you will do nothing else with your life. If you give me full-time attention for 6 months, 9 to 5 a day for 6 months, I'll give you every single technical concept you need to learn, and you will be able to remember. I don't mean just give it to you. I'll give it to you and help you get it, understand it. You can point it out in a chart. You can see it, not just in hindsight. You can see it coming. You will be an amazing instructor between 6 to 12 months. The one thing I can't teach you in 12 months, I'm not saying you can't learn it in 12 months. I can't teach you in 12 months is the emotional, sentimental, and psychological side. How long will that take you to learn? That's between you, the charts, and God, or whatever higher power you believe in. Because everybody evolves. Good to see you, Ivy. Everybody evolves at a different pace with that stuff. But it's the most important stuff. In essence, if you get you can know one entry pattern, one system. You can be a horribly skilled technique. You can only know one way to trade. And if you have the emotional, psychological, and sentimental prowess, you will become a successful trader. And so I like to deal with psychology near the beginning of each set of students I teach. Because there's no point learning all this big cadence and grammar and order blocks and liquidity profiles and discount and premium and Fibonacci's and entry patterns and engulfings and what else? Manipulation bars and market maker profiles and all those things. They are useless if you don't get this part right. Let me repeat. I said they are useless. You heard me. Absolutely useless. 0% use. Right? If you cannot get this part correct. And so having said that, let's talk. Let's talk about some of the things I learned along the way. Some things which I wish I had known. I wish somebody had pulled me aside, and said, "Young man, you want to be a trader, right? These here are the things you need to know." I'm going to give you what I wish somebody had given me. And the truth of the matter is, to be honest, even if they had given me, right, I don't necessarily know that I would have listened, is the honest truth. But hey, there's a first time for everything, right? So with that being said, let's dive into a couple of these. Now, a couple of them I already have out on slides. A couple I'm going to type out. So I'm going to create some of these slides as we go along, right? So I'm going to create some of these slides as we go along. Let's talk about trading psychology. If there's one thing I wish I could do again, it is go back and make sure that before I started learning anything about technical analysis, anything about trading concepts, I wish I had gone, or somebody had pulled me aside and said, this is how to think, not just as a trader, but as a successful person, period. All right, let me repeat. In fact, let me type this out. Let me type this out. This isn't part of my, it's not part of my slide so far. So I gotta type this one out. I gotta type this one out. There is a mentality, mindset, paradigm, consciousness of success. I wish somebody had said this to me a while back. Nobody did. In essence, success, as they say, is 90% between your ears and 10% in your hands. Let me repeat. Success is 90%. There is a mentality. I can spend 10 minutes around you and figure out if you make it in this business. And it's not just in this business, in any business. In any, see, if this is the last session you listen to, if you get, because today I'm going to say a lot of things that are going to offend, or that may, no, they won't necessarily, but they may offend your pride and your ego. All right, but there's a verse in the Christian Bible that I love and I use all the time in my business seminars. It says, faithful are the wounds of a friend. Better I cut you in love than life kill you. I can spend 10 minutes around anybody doing anything and figure out whether or not they're going to be successful. You know why? Because I used to have the failure mentality. I used to have the failure mindset, the failure paradigm, the failure consciousness. This is why they say those who can trade and those who can't teach. Because two sets of people can learn the exact same concepts. One of them will succeed at it because they have the right mentality, mindset, paradigm, and consciousness. The other set will fail, but they'll be great teachers. Oh, they'll be amazing teachers. They can show it to you on a chart. They can give you all the theory, and they can teach you to be successful. But they have the wrong mentality. That's the first thing I wish I could go back and change from 13 years ago across the board of my life. Is my internal reality primed for success or failure? I'm going to come to that, not today. I'm going to come to that in another psychology class, because that's a class all by itself, developing a success consciousness. But there's three things that I want to give you real quick. Three things real quick that, in my opinion, are part of that success mentality. One is the humility to accept failure as tuition. Can you accept failure as tuition? Or do you have to be the best at everything you do immediately? There are some people who cannot handle the fact that when you start something, you are not going to be near as good as someone who's been doing it for a long time. If you cannot accept failure, if you don't know how to acknowledge your inadequacies, especially at the beginning, this is not the business for you, because you will fail. I'm not prophesying negatively. I'm not attacking you. This is not negative confession. Every person who starts trading will fail at some point. And if you are lucky, you will fail at the beginning. If you are very unlucky, you start off like a rocket and fail down the middle when it's worse. Successful people don't mind failing because they see it as tuition. They're humble enough to know that they're not the best thing since sliced bread. And they see failure as feedback on what they're doing that's wrong. Let's put that there. Failure is feedback that you are doing something, in bracket S, wrong. It's not personal. Successful people have depersonalized failure. It doesn't affect their psychology. It doesn't affect their sense of esteem. It doesn't affect their ability to feel good about themselves. They don't need success to feel whole and significant. And so they can see failure simply as feedback. They're doing something wrong. They figure out what they're doing wrong and they fix it. You're going to do a whole lot of that in trading. Which is why we keep shouting, don't risk more than 1%, especially when you're a new trader. In essence, if you're risking 1% per trade as a new trader, the cost of every mistake you make, your tuition fee, is 1% of your account. If you're risking 5%, you're going to learn the same lesson. You're going to get the same tuition for 5 times the price. Are you listening to me? I don't expect this to be necessarily my most popular webinar. I don't expect this to be the most attended, because people can say, yeah, I don't need all that. But then ask, if you click off this webinar, if you click off and you are not yet a successful trader, you know you're not yet consistently profitable month after month, then you're just proving that you have a failure mentality. Unless you're clicking off because you're busy, you're at work, that's fine. But I mean is, if you're like, well, I'll come back when he's talking about charts, that's exactly why you're failing, right there. The second thing I've learned about successful people is they're not in a rush. Let me put that way. They don't waste time but they're not in a rush. They don't want to make it overnight. Well, they do, but they can, let's put it this way. They can fight the urge for instant gratification. They don't mind the long-term process. They don't want to start something today and become the best at it in the world tomorrow. If you have that problem, these markets will cure it for you. Don't believe me? Stick around long enough. They will humble you. When I first started trading, let me let me give you the first embarrassing story about me. So my background was as an accountant, qualified accountant, no less. Auditor, no less. So I drew up a spreadsheet. I still have it. I don't know if I have it on this computer. But I drew up a spreadsheet that told me how much I would make over 1, 2, 3, 4 years at a certain risk to reward ratio and a certain frequency of trades a week. And by my calculation, I was going to make $1 million in the first year. And by the 5th year, I was going to be pushing almost 100 million by my calculation. And I was going to do it immediately. Now, I want to ask you a question. If your loved one had a terminal illness or needed life-saving surgery, would you want someone operating on them who had 2 weeks of studying medicine from Google and YouTube? Just answer that in the comment section for me. You have a loved one with a terminal illness or who needs life-saving surgery. Would you be okay? Actually, let me correct that title there. That's a misleading title. It's not this one. It should say profile of successful people. Right. So I said, would you want them to have a degree from YouTube? Just asking. Okay. A couple of people say no. That's good. I hope so. So why do you think that you can watch a couple of videos on YouTube in anything and suddenly become an overnight success? I just want to know why people think, and I know the answer to that. The answer is some idiot who wanted your money, rented a car or hired a car, hired a house for a few hours to take a photo shoot, photoshopped in a private plane in the background, hired a Bentley, and told you, if you come and start trading, you're going to be so rich, you'll be able to buy all these things, and played on your greed, and didn't tell you they still live in their mother's basement, didn't tell you they still take the bus everywhere because they can't afford a tire, much less a car, and use the money you sent them hoping to learn the Holy Grail to buy their first car. And so you rush in thinking, I'm just going to learn this thing in 2 or 3 weeks, and I'm going to be a world beater, and I'm going to be on the face of everybody's Instagram trading profiles. And 3 months in, like the brokers tell you, 90% of all new traders lose 90% of their equity in the first 90 days. Let that sink in for a second. 90% of all new traders lose 90% of all their equity in the first 90 days. There's a reason why. This thing you're holding called your laptop is an AK-47. Your MetaTrader, your TradingView chart platform is an AK-47. If you point it at the enemy, it's good. If you turn it on yourself, you will commit suicide. So they don't waste time, but they're not in a rush. They are prepared. Now, this is not all. I'm just giving you 3 today. We'll do a whole class on the profile of success. They don't waste time, but they're not in a rush. They're prepared to be meticulous in their learning curve. They expect it to take a while to become proficient, and they give it the attention and the level of meticulousness it desires or it requires. The third one I want to give you before I go any further tonight, my time here in the United Kingdom. Are you ready for this one? They have a measuring yardstick that goes beyond money. Notice I said goes beyond. There is nothing wrong with money being a part of your measuring yardstick. Absolutely nothing wrong with that. Anybody who told you money doesn't matter either doesn't have any or has too much. No, money matters. You got to keep the lights on. There's no point. For instance, there's no point trading if you're not making money in the long run. Why are you doing it? If you want to play a game, play an Xbox or PlayStation. If you want to gamble, go to Vegas. Trading is not the place just to have fun. No. But all successful people, not just traders, have a measuring yardstick that goes beyond money. And this will take us to the first slide that I had prepared for you today. They determine this yardstick well in advance of any pursuit / project. They take the time to ask themselves, what does success mean to me? Before they start engaging in anything. How many of you sat down to ask yourself, why am I doing this? What do I hope to gain from it? And how will I know when I'm successful? In the words of a man called Stephen Covey, who wrote a book, a classic. I read this book for the first time about 20 years ago. I read it again about 5 years ago. They begin with the end in mind. They start from the end and they work their way back. What do I want to accomplish? What's it going to take? Sometimes they ask themselves, in fact, let me type this out as well. I mean, this is good. This is good. This was unplanned. They ask a few questions. What do I want to accomplish? Let's call these success self questions. What do I want to accomplish? How will I know? How will I know when I have / how far along the way I am? What will it cost? Because successful people know nothing of value comes for free, and not just financially. Failures are constantly trying to bargain, both financially and other ways. For instance, there's a lot of people who write to me or write to us in our team to say, we'd be interested in your mentorship. When they hear the price, some of them sincerely can't afford it. Now, this is the cheapest by far you find anywhere of anywhere near this quality. In fact, I'd say several other places given this for multiple times the price don't have anywhere near the value. But some sincerely can't afford it. They just can't. And I understand. And when I hear from them, when I read from them, I know this person is not being funny. They just can't. And so I tell them, you know what? We can't really make it any cheaper than it is. Hopefully your situation improves. Get back to us. But there's a few people who I can hear in their voice or read through their writing. It's not that they can't afford it. They want it free. And if you want it free financially, you'll also want it free in effort and with what it costs. you've got to count the cost. If it doesn't cost anything, and I don't just mean money, I mean time, effort, mindset, stress, pain, discomfort, it's not worth having. What will it cost? What changes will I need to make? Because there is a certain kind of person that succeeds at a certain kind of thing. Write that down. Success in any endeavor is reserved for a specific kind of person. No, I told you I can spend 10 minutes around you and I will tell you whether or not you'll be successful at whatever it is you're trying to do with your life. Because especially if I know that thing, if it's something I might not be doing it myself, but if I understand that thing on some level, I can take 10 minutes looking at you and say, nah, this person ain't gonna make it. Not in their current state. For instance, trading required me to make some changes of my life, and I'll come to that in a second. I wasn't born to be a great trader. I was born to understand it easily, but my natural personality is horrible for trading. And I had to look in the mirror and say, dude, you are going to keep crying and failing until you pay the price in changing stuff about you. What changes will I need to make? 5, who do I need in my corner? Hopefully, we here at Israel Keys are part of that. Who do I need in my corner? Because you are not going to get from where you are to where you need to be on your own. There's stuff you don't know. There's things about yourself that need changing. There's habits you need fixing, but you also need inspiration. You need accountability. You need support. Who do you need in your corner? And not, for instance, in trading, some of the people you need in your corner are not traders. You need your family. You need your friends. You need, I take that back. You don't need your family or your friends. You need, let me rephrase that, because many times your family and your friends are going to be part of the problem. You need healthy, you need healthy relationships outside trading to be in the best frame of mind for it. I'll come to that later. Who do I need in my corner? 1 second. Where was I? Okay, let's see. Who do I need in my corner? And then finally, what is my exit threshold? And this sounds crazy. Why am I teaching you to, no, you should be saying, I'll die at this thing. No, honey, you need to know at what point to acknowledge that this is not for you. Let me repeat. You need to have a checkout level, or at least a fallback temporary level. And once you've defined it, you don't quit short of it. Before the pain of the process begins, you tell yourself, I'm going to give myself 5 years to make it as a rapper. You don't quit at 4.5 years. If in the 5th year, anybody want to buy your mixtape, then you go get a job in Curry's, or Walmart in America, or ShopRite in Nigeria. Does that make sense? Defining an exit threshold gives you the room to maximize your time between now and there. I will stop when I blow $5,000. You don't stop at 4,500. On the other hand, you get to 500, you say, okay, I'm going to take a break. Even if I don't stop altogether, I'm going to take a break. I'm not going to go borrow another 5,000 and in my toxic mind, because the fact that I've blown 5,000 tells me something's wrong here. I need to step back and fix it or walk away altogether. So I'm going to leave these there. Now let's look at a couple of other things. Why do you want to trade? Why? For many of you, it's a horrible reason. Like I said, If you got into this business because of greed or competition, either check out now, speak to me after today's session, either check out now, right? Or we need to sit down with you and help you reprogram your mind. Because the market will expose you. And let me give you a couple of reasons why some people get into trading. Let's give a couple of examples. Wrong, wise. Number one, I need money. Just stop right now. Notice, I didn't say I want money. I said I need money. Let me make that clear. Not I want. Need. If you approach the market begging for your rent or your food money or gas or fuel for your car, it will abuse you. Trading is not a quick get rich quick scheme. Just back out now or change that mentality. Number two is all my friends are doing it. That sounds familiar, right? We've been saying that all the way since high school, many of us. Peer pressure. All my friends are doing it. Honey, it's going to get bloody. And when you're suffering through the process, those friends ain't going to be there. Again, if this is your reason, check out now, please. Number three is what I call attention addiction disorder. I don't know if that is actually a thing. That's just my word. It could be that it is a medical term. If it is, I'm not aware. If it's not, don't worry. I'm not claiming it is. It's just something that I coined for myself. An insatiable need to be the center of attention. The people who people get into entertainment because of this. They get into sports because of this. They get into politics because of this. Even people in religion get into clergy work, being pastors or imams or priests, simply because they have to be the center of attention. They don't care how. They just want to be famous or significant. So, it's the same reason why people go naked on social media. Well, some go naked for money, but most people do it just because they want likes, they want clicks, they want attention, they want to be seen. And so if I become a superstar trader and I show everybody how good I am and put all my wins online, I'll get a following. Wrong. Very similar to this is approval addiction. Again, my words, I don't know if these actually exist. Disorder. Where you want to be liked. You want to be accepted. And again, being a star trader, there's many online, many popular traders around the world today. Not all of them are good. Not all of them are successful. Some are broke, as we've been finding out over the last few years. But at least they have approval. They have attention. I'm bored. If you're bored, go play a computer game. Go window shopping. Does that make sense? Do not trade out of boredom. It is not a game. And the final one I'm going to address today, there's many of them, many bad ones. You can come up with some yourself. Hit me up in the comment section. Can you give me some ideas of what you think may be a bad why for your trading? I'm looking at the comment section. Just put them in there. Tell me, give me some examples of what you think may be a bad why. The final one I'm going to put here is, I am a gambler. And ladies and gentlemen, this is my story. Now, I've never actually gambled, really gambled, like gone to a horse race or put a bet on a football game a day in my life. But I had a gambling streak. I was the kind of guy who liked to, please don't tell anybody this. If there's any policeman watching, this stopped like 10 years ago. Oh, I saw one. To prove your haters wrong. Yeah, I'm going to show you. In fact, let me add that. So to make space for that on this slide, I'm going to need to take these off. So that can go up there. And that can, yeah. To prove the haters, let's use Gerard's word. I was going to say naysayers. Prove the haters. Don't hate the player, hate the game, right? To prove the haters wrong. But coming back to gambling, I used to drive through red lights just to see if there was a car coming on the other side of the road. I know this is stupid. I know this is dangerous. Long time ago, you know, I've been cured of that nonsense. But when I was a teenager, when I first started driving as a teenager, right, I used to go through corners without stopping. And the few red lights that existed, I grew up in a city called Lagos. The few red lights that did exist in my city at the time, I would drive through them just to see. Well, nobody paid attention to them anyway. But I would drive through them at speed because I love the thrill of seeing whether or not a car was coming on the other side. When that kind of guy starts trading, Lord have mercy. And so for me, trading was fun. Oh, let's see where this goes. Yeah. All right. So, now that we've dealt with that, why should you be trading? There's several individual answers, but in my opinion, they all fall under one single summary. I want to learn a skill that will add value to my life and others around me. And this is not just for trading. This is for any endeavor you take up in life. In fact, let's go ahead and capitalize that. This is the reason why you should get involved with trading. And like I said, not just trading, but any other endeavor in life. I want to learn a skill. Let's see. Do I need to split that up? Okay. I want to learn a skill that will add value to my life and others around me. Simple. Now, value includes money. Let's stipulate what that value is. Right. Get rid of that. Value includes money, discipline, what else? Money, discipline. What else would trading add to your life? Relationships. So let's put money, character. Let's just do character. ETC. And trading will give you all of that. Right? Absolutely all of that. Okay. Let's jump ahead a little bit. This is how trading will change your life. It'll show you yourself. It'll teach you human psychology, meaning you'll learn how to figure out how human beings behave. When you look at a chart, you're really guessing or analyzing human psychology. It'll force you to develop a routine / a schedule. It'll demand from you humility and teachability. It will force you to confront the fear of failure. It'll teach you the power of community. It'll teach you the value of money and time. Let's go over these again. In fact, let me adjust that. It'll teach you about yourself. It'll also teach you about human psychology. Let's put yourself in capitals, shall we? So you can draw your attention to it. And let's go ahead and make it bold and underline it. Yourself. That's the first thing you are going to learn before you succeed as a trader. Before you learn about a candle or a chart, before you learn about a market maker or a retail trader, before you learn about an indicator, you will learn about yourself. And for those of you who are in the closed forum this afternoon, not all of these are online. We do a lot of them just with our registered students on Zoom. We spoke about understanding the kind of trader you are, right? Well, the kind of trader you are comes from the kind of person you are. Teach you human psychology. You learn how other people function. You learn when other people are going to make a mistake you can capitalize on. You learn to see a market maker think, to see a retail trader think, to see a hedge fund think. And as you get better, you remember the kind of mistakes you made and you see other people making them on your chart. In fact, you will be banking on, and this is the painful part about trading, you are going to be hoping somebody else makes the same mistake you used to make, because that's the only way you will find a trade to profit from. It sounds mean and horrible and wicked. Just take it to the bank. Write it down. If you're still doing this 3 years from now successfully, you will remember I said this. You are going to be subconsciously hoping that somebody out there does something stupid, and how to recognize when they've done that stupid thing on the chart, because their mistake is your entry. It will force you to develop a routine and a schedule. It's very easy to say, I don't trade on Mondays and I rarely trade on Fridays. I'm only looking for an entry from 6 to 10 a.m. London time, 12 to 3 p.m. London time, and 5 to 7 p.m. London time. I'm only looking for no more than 2 trades a day. I am only watching 3 pairs a day, and I'm expecting my entry between Tuesday and Wednesday, my first entry. It sounds beautiful on paper, right? And I've shown you guys, those of you who are part of our trading community, it works. But it is I by nature, I'm not a routine person. I'm a free spirit. I'm a take it as it comes kind of guy. I'm extremely spontaneous. Trading has forced me to develop a cadence to my life. It'll demand humility and teachability from you. We've dealt with that already. It'll force you to confront the fear of failure. Like I said, if you will succeed at this, you'll have to learn how to manage failure correctly. It'll teach you the power of community. Teach you that you can't do this on your own. You need other people around you. Newsflash, even as your teacher for many of you, even as the quoted unquote principal of this school, I feed off your energy. I need you guys in the Telegram group. There's days I don't want to trade. There's days I don't want to get up. I'm tired. I'm sleepy. But I know I need to give a signal. I know Gerard's going to so Kieran's going to crack a joke and Gerard's going to say something funny and I'm looking forward to the banter. Right? When I have those ones, well, I don't do them anymore because last year I was trying to prove a point. I got to be honest. Last year I was trying to prove a point to some people, some old traders I was coaching, that institutional order flow works. And these guys were already profitable. So I had to show them entries and exits. Joshua, if you're online, you probably remember this. I had to show you guys entries and exits to the pip. So for those of you who were in my WhatsApp group last year, I was taking trades with 1 pip drawdown, 2 pip drawdowns, right? Because I wanted to prove this thing worked to stubborn people. But I was also missing out on trades because my entry would be missed by a pip or by 2 because I was trying to be so precise. And I need someone to whine to. So when I put those, oh Lord, look at this trade, I missed it by 2 pips, or it nicked my stop loss by half a pip. It helps to have other people in your corner. Not other people thinking for you, but other people you can at least share the journey with. It'll teach you the value of time and money. It'll teach you that if you oversleep by an hour, you could lose out on £1,000. It's happened to me several times. I've woken up 30 minutes later than I should have, and I missed a trade that would have paid me $1,000 that day by 30 minutes. It's life. Your job may not teach you that because you don't get fired, or even if you get fired, you get another one easily. But when 30 minutes costs you $1,000 for the vast majority of those of us here, and the higher you go, that $1,000 becomes bigger and bigger. If you're George Soros, 30 minutes could cost you $10 million. Teach you the value of money and time. And also you realize that $1,000 you blew on that vacation, that was your 3rd vacation this year, could have been traded into an account of $20,000 in 2 years or less. Trading will teach you how to value your time and your money. Trust me, guys, when you start to get good at this, you will not stand for people wasting your time. You won't stand for people standing you up, being late to appointments and things like that, because you realize those 5 minutes are valuable. And you'll also learn not to waste money. Okay. Let's move on. What should I avoid? Oh, I wish somebody said this to me. Israel, where were you for yourself 13 years ago? What to avoid? Number 1. And I cannot say this see, I've told you guys this, right? If I catch you doing this chronically 2, 3, 4, 5, 6 times, I might kick you out of the academy. And I explain why in the afternoon. Over leveraging / over risking. Listen to me. Gather around everybody. You know, like they used to say back in the days when we were young. Gather around, little children. I want to tell you a story. Everybody gather around. Lean into your laptop, your screen. Look at your phone a little bit closer. Listen, I'm about to save your life. If you're my student and you are chronically over risking, I will kick you out after 4 or 5 times. Because it will scar you. You will lose, and badly. It will psychologically traumatize you. And you will associate your pain with me or any of the other instructors in the academy. Your mind will lie to you that we tricked you, that we sold you a bill of goods, that we promised we could teach you the trade and we lost your money, even though you lost the money, and you will resent us. And I would rather we never be your teachers than we occupy that horrible traumatic space in your history. This is the most common source of failure. And let me explain. I've said this a billion times. What should you put in your account? Let's type this here. I've said this several times, but this is the first time I'm actually documenting some of it for you to see on the screen. See, how much should I fund my account with? Right? Many of you have asked that question. Maybe some of you have asked me that question. Well, this is the answer I always give. How much money could you lose, could fall out of your pocket today while you're walking down the street, that would tick you off but would not depress you? In essence, you wouldn't bother going back out of your house to look for it. Excuse me. Now you might walk down your street. Excuse me. That was my dinner coming back out. You might walk back down your street to see if you forgot it on your street. But if you were at a park or on a bus or, I don't know, at a chippy shop, we call them chippy shops in the UK. I don't know what you guys call them in the States, where you buy chicken and chips and stuff like that, or kebabs and stuff like that. You would not leave your house to go back into town to look for the money. Let me repeat. It would be enough to tick you off slightly, but it would not be enough for you to put a hole in your day to go back, calling the police, looking everywhere for it. That amount of money is what I call your emotional threshold. It's the maximum amount of money that you can lose without going into an emotional state. Why is that important? That is notice I say the maximum. It doesn't mean you have to go all the way up to it, but that is the absolute maximum that you should be losing on one trade. And if you're the kind of trader who takes several trades at the same time, that's the maximum amount of money you should have the possibility of losing at any one point in time in the market. In essence, if you have 3 open trades as of right now, the total stop loss on all 3 trades should not be more than that amount of money. Why? Because when you're emotional, now this isn't part of my session today, but I've shown some of you guys this already in the mentorship. The 4 main emotions that manage the market: there's greed, there's fear, there's pain, and there's pleasure. Right? Greed, fear, pain, pleasure. Greed and pleasure are triggered by the possibility of profit. Pain and fear are triggered by the possibility, well, greed and pleasure are triggered by either the possibility or the experience of profit. Fear and pain are triggered by the possibility or the experience of loss. When your emotional threshold gets triggered, you start behaving emotionally. And when you are behaving emotionally, you're not behaving rationally. And you will do stupid things when you're emotional. Like move your stop loss because you don't want to lose, and turn $100 loss that is still too big anyway into $1,000 loss. I once did this. I did this as early as 7 years ago. As recent, as 6.5, 7 years ago. I was so sure, but I'll never forget them. The 2 trades were Euro CHF, right? Euro CHF and AUD CHF. I got into both of them. My initial stop loss was about $100, which was way too much. That was 10% each of my account. And I kept telling myself, I know this trade's going up, or going down, sorry. And what would have been a $200 loss across both trades, I came out of 4 days later at $950 in the red. My account size then, that account was $1,000. Because I was emotional. I did not want to acknowledge I was going to lose $200. I ended up losing $950. Esther says, I have to let me put this comment up on the screen. As I said, I have a low threshold then, because if you lose $100, you're going back for it. Then don't risk $100, Esther. That's the trick. Anything you have to go back for, don't risk. It shows you can't handle it. You know what? I mean, see, guys. For instance, many of you know, I don't throw it in the face of everybody, especially in my business circles. But I'm not ashamed about the fact that I am a Christian, right? Everybody should be proud of who they are. Oh, I prayed those 4 days. I look back now and I'm like, how stupid were you, Israel? Of all the things in the world to pray about, I'm spending valuable time on my knees, screaming my lungs out to the heavens about a trade. Now in hindsight, it is so stupid. But that's what emotional thinking will do to you. And you get emotional when you have more money to gain or lose than you're used to. Because it works the other way. If this trade could potentially pay me more money than I am comfortable making, greed will take over. If it will lose me more money than I can afford, fear will take over. Both of them are emotional. And so you want to be trading at sizes that are relevant but unemotional. In essence, you're not just going to enter a stupid trade because you don't care about this amount of money. No, it's enough money. Yeah, yep. You're right, Kiran. It was a transformational moment in my trading career. But I would give anything for it not to have needed to happen. And you know, I keep telling you guys how my method trader is like my browser. Well, there you go. You see how many browsers I have open? It's ridiculous, isn't it? That's just the way I am. So you can see how my real life, how I browse, how I work with my browser comes into my trading, how my method trader looks. But like I said, I would give anything to not have needed to learn that lesson that way. The maximum amount of money you can lose without being emotional, multiply by 100. That's the maximum. Max. Doesn't mean you have to put all of it. That's the maximum amount of money you should put in your trading account at one time. Hear me. And you only risk a maximum of 1% of that account. If you want to risk 2% of your account, right? Then take the maximum amount of money you can afford to risk times 50. Then you have 2%. But you should never have more money on the line than you can emotionally reconcile. Because trading should be boring. That's what I said. That's why I said, if you're trading because you're bored, you're in the wrong business. If trading is still exciting for you 1 or 2 years in, you're probably a bad trader. Let me repeat. Now, analysis can be exciting. I love analysis. Seeing price action play out just, rings my bell. But if the live activity, if actually placing a trade and sitting through it, waiting for the result, if that is still exciting 2 years in, you're doing it wrong, because it should be boring. There should be a list of rules you're following that make you yawn. Oh yeah, that's a market structure break. Or actually, that's a stop hunt 1. Market structure break 2. Return 3. Discount to premium Fibonacci 4. Expansion target 5. Order block come out 6. It should be so boring that it doesn't affect the rest of your life. You should be able to do it and have a life. See, if trading is taking over your life, you're doing it wrong. Stop. If it's affecting your ability to function as a spouse, as a parent, as an employee, as a business owner, as a sister or brother, as a friend, as a community member, if you are so knee deep, if your emotions are so fried when you're in the market that you can't focus on anything else, Thank you, Kieran. That's the word I was looking for. Monotonous. Thank you. I told you guys English wasn't my first language. Trading should be monotonous and mechanical. If you are going through, if you're still going through wild emotions, you're doing it wrong. And usually one of the reasons why that's the case is you're over risking, over leveraging. I'm glad that in the UK now, the maximum amount of leverage you can get on an account is 30-1. Thank goodness. Thank you, Lord. People were killing themselves because you're forgetting when you take that trade, right, with 10 lots, you've borrowed the money to take the trade. The broker has borrowed you the money. It's called leverage. Yes, it will compound your wins. It will also compound your losses. And remember, I said successful people acknowledge the fact so I'm looking for now. They accept failure as tuition. They acknowledge the fact that they will not be successful overnight. They don't waste time, but they're not in a rush. They're prepared to learn. In essence, you will lose at the beginning. You might as well lose less. Like I said, pay less tuition for the lesson from that loss. Oh, if I had $10 for every person who's told me I shouldn't force my opinion on them, this is just the way I function, it's okay. You will see. You will try it. You will come back crying. I guarantee you. It may take 5 years, but you will blow an account. And the more success you've had before you blow the account, the worse it will feel. Emotional threshold. And multiply by 100. And then maximum, especially as a beginner, maximum 1% risk. I don't care how good your system is. There will always be that one trade that meets all the rules that still fails. Maximum 1% risk. Like I said, if you want 2% risk, then multiply your emotional threshold times 50 to put in the account. But at no one time should you have more than your maximum emotional threshold at risk in the markets. I am pleading with you on bended knees. It will save your life. I'm almost done. Number 2. Numbering. The urge to overtrade. This is just as bad as over-risking. Not every signal should be taken. I wish I could turn back the hands of time. If you stare at a chart long enough, you will figure out a reason to get in a trade. Stay away from charts when you feel emotional in life. You know what? This is actually I'll come back to the order of a trade because this is number 3. I've jumped to number 3 already. Let me deal with this. Let me deal with this one right here. Let me kill this bad boy right here. Let me save you from your future self. Your future self will thank me for this. Don't use trading as emotional therapy. You know the way people comfort eat and comfort shop Right? And so then we get this. Stay away. People comfort eat and comfort shop. The urge is very strong to comfort trade. It will kill you. If your life is not going well, stay away from a chart unless you have developed the emotional discipline or you're still a demo trader. I'll give you an example. I'll give you several examples of my life when I've blown serious money simply because I was looking to a trade to give me the pickup or give me a pickup from a bad life situation. I was unhappy, frustrated. I felt betrayed by someone. I felt rejected by my friends or by something. Something in my life was wrong, and I went to the chart for therapy. The market is a bad psychologist. The market is like the parent, or what parents used to say when I was growing up. Now these days we're all good, we've all been taught parenting skills. We're all excellent parents. When I was growing up, if you started crying unnecessarily, your mom would say something like, "Come, let me give you a real reason to cry." The market would say, "Oh, you think your life is bad, eh?" Because you called your girlfriend and she didn't pick up the phone. You think that's bad. Let me give you a real reason to cry. How do you like this 50% loss? How do you like this 30% drawdown in one day? It says now you can properly cry. Don't use trading as emotional therapy. Please don't. Let's go back to overtrading. And this partially comes from greed. Greed makes you want to take as many trades as possible because you think you make as many wins as possible. There's one small problem. The more trades you make, the more losses you'll have. Also, you will talk yourself into taking trades that don't meet your trading plan and hate yourself. Don't believe me? Let's talk again in a few years. The worst kind of losses are the ones you should never have taken in the first place. It's painful to see a trade you should have taken win without you in it. It's 10 times worse to be in a trade you should not have taken that has now lost. Don't do it to yourself. It's so destroying. It really is. It's emotionally wrenching. It's I really don't know how to say it. It would nah. The memories, the nights I was up with my wife asleep beside me. I couldn't even tell her what I'd just done with our money. Couldn't even tell her what I'd just done with our money. Could not. And then you want to make it back immediately. This is how overtrading works. You take trades you shouldn't have taken. You want to make it back. Your plan calls for 3 trades a week. You've taken 15 that week. Of the 15, guess how many you won? 3. The same 3 you should have taken to begin with. It's a vicious cycle. Stay away from it. Absolutely stay away from it. I'm going to do one more tonight. I'm going to call it a night. We'll continue this at some point next week. I'm not sure what day next week, but one of our YouTube sessions next week, I will continue with this. And I think this is a very good one for YouTube because it'll help a lot of people figure out if they're cut out for this in the first place. And for those of you who still believe you are, now you know what to expect. Number 4. And this is important. This is very important. This is the last one for tonight. Stay with me now. This one right here. Fight the urge to show off. When I started my trading community last year, my mentorship group last year, for the first few weeks, I was posting signals and results on Instagram. I stopped after 3 weeks because I realized I was starting to fall into the same trap. So maybe you guys remember, right? That's how a couple of you found me in the first place, on Instagram. I stopped. I was doing it as a recruiting tool, as a marketing tool, you know, and it worked. But then I thought I'd rather have no students than fall into this vicious cycle. Because you will start entering trades thinking not of the process of how to play out, not even about the money you'll make. This is how I knew I was in trouble. When I started entering trades, planning on how to show off my win. And I had some spectacular wins. And those are the days when, like I said, to prove a point to the experienced traders I was trying to convert, my entries and exits were like 2 pips away. Or 2 pips drawdown to, you know, it was the precision was scary. The level of precision I was showing was scary. But I started realizing that I'm entering the trade and I'm already planning my Instagram post. Like, nah, I ain't gonna fall into this trap. I've been burnt too much to fall back into this trap. Because it will, see, I don't know how to say this. Don't trade for validation. The only validation you should be looking for when you trade is that you followed your rules. Period. Let me repeat. The only validation you should crave from a trade is that, let's put it this way, from a trade is the feedback on your rules / approach. That's it. I followed the rules and they worked. Great. Or, well, I followed the rules. They didn't work this time. Let me find out why they didn't work and fix it for next time. That is it. Any other thing will get you in trouble. Don't believe me, you will 2 years from now. It becomes a vicious cycle. Because when you start losing, you think, well, I'm going to look like a fool, because you will lose. See, every trader, this is why you shouldn't over risk. Every trader, write this down. You will suffer a 5 to 8 loss string, losing string. Write it down. Write it down. And hopefully it's while you're still on a demo account. A time will come where you will lose between 5 and 8 trades in a row. In a row. Let me repeat. Every trader will have a patch where you lose at least 5 trades and sometimes up to 8 or 10 in a row. And not necessarily because you're doing anything wrong per se, just because you're not yet skilled enough to understand the nuance of how to use what you're using. What happens if your sense of validation, your sense of importance, and your sense of significance is your winning streak? But I was when the same people who you've been posting for every other day start noticing. For instance, I haven't posted on that Instagram channel in almost a year now. Yeah, it'll be a year in about a month or 2 months from the last time I put. No. I think the last time I posted was November, October. So about 2 months away, 2.5 months away. But I kept asking myself the first few days I didn't post anything. I hope nobody thinks that I'm losing. And then this is why I shouldn't be doing this. My sense of value, my sense of validation as a trader, my sense of importance is tied towards some person I'll never meet thinks about me on the Instagram. I was telling one of my students the other day that, not several, that's an exaggeration, but a handful, at least 4 or 5 superstar YouTube traders have slid into my DMs, non-dodgily. I don't mean the sexual version of slid in, but when it's talking about sliding someone's DMs, it means flirting with them. But at least four YouTube superstar traders have hit me up in my DMs, asking me about my academy and my system. One of them actually put a comment on one of my videos about how amazing this video was and how it taught him something he'd been struggling to learn for a while. And then a few hours later, the comment was gone. And I know why. Because when I went and I checked out his channel and I saw that he had about, how many subscribers have I got right now? I've probably got about 350 subscribers as of the time I'm doing this video. He had almost 3,000. So he had about 10 times as many subscribers as me. And his ego would not allow him acknowledge or allow him contemplate the fact that the people who worshipped him would see him validating someone else as teaching him something he'd been struggling with. And then he hit me up privately to say, how does your mentorship work? I responded, I've never heard back from him. I'm not surprised. There have been 4 of them over the last year since I've been on YouTube. Because it's all fluff and no substance. If you build your trading career on showmanship, it will affect your ability to learn the basics and develop a solid foundation. It is a trap, a vicious cycle that is hard to recover from. Don't do it. In the early days, the only people you should be showing your results to are your mentor or your instructor, aka myself, Tokma, Joshua, or the people in your trading community, and not to show off, for mutual accountability and inspiration. If you realize that you are starting to look forward to saying, hey, I made $10 or 10, whatever it is, there's a problem, fall back. It'll create horrible bad habits. You'll regret it down the line. For instance, you'll be in a trade. Let me give you an example of how it works. You'll be in a trade that you should live to run for another few hours or few days, depending on what kind of trader you are. But because you're scared of a loss and what it will look like on your Instagram profile, you'll close the trade early and then see it go for another 2 or 3 times what you took. And they get angry and jump in again down the line when it's starting to reverse. You won't enter a trade you should enter because you don't want to take a loss, because you got to show your results page at the end of the day. Or you take a trade you shouldn't take because you need a picture. You need something to boast with. Please don't do it. You regret it. I've done it. Learn from my mistakes. It's not worth it. It just isn't. All right. I'm going to stop there for tonight. I'm going to do a part 2 of this next week if you guys are interested. You guys interested in the part 2 of this? Or you think this is just, this is just baloney? Okay. Any questions? I've got a whole lot more. But like I said, I'll save the rest for part 2. Any questions on what we've covered today? Or comments? Or contributions, or your own experience, whatever it is, anything you want to say or ask. Okay, a couple of people say yes. Yes to part 2. Okay. You're happy to learn from our mistakes. Well, that's the whole point of mentorship. It means you get to learn from somebody else's pain. You get to learn from someone's pain. I've heard people say experience is the best teacher. My response always is yes. Someone else's experience is the best teacher. Why learn from pain what you can learn from someone else? Kevin says, I learned about the importance of, yep. Don't do it. Yep. Any more? Any questions? All right. In the absence of any more questions or comments, I move the motion that we call it a night. So I will see you guys tomorrow for our last session of the week. It's always on a Friday at 11 a.m. where we review what Price has done over the course of the week. To get hands-on coaching, teaching, training, mentorship, be part of our community, send an email to israelkeysgroup@gmail.com. This is what you have to look forward to. If you do that, if you get on board with that, 3 pillars of our model: Market Breakers course, that's our pre-recorded course content, structured course content, our VIP mentorship, a Mastermind Inner Circle. You get all of that. We've got about 20 something spaces left to get to 50. And until we get to 50, you get all of that for £79.99, not dollars, that's pounds a month. Once we get to 50, that goes up because that's stupid cheap at the moment. But we're doing it so you can get in at the beginning and be part of helping us give feedback on the user experience of the model of the course. And this is our weekly calendar, which you just saw a second ago. So that happens every week. Not all of this is on YouTube. Some of it is on Zoom in private. Like, for instance, this morning's session at 11 a.m. was in private. Last night's session was in private. Tomorrow we're back on YouTube, 11 a.m. In addition to this, you get pre-recorded course content. You get access to personal instructors. You can ask questions. You can review trades with. You can look over charts with you. It's just great value for money. All right, guys. So see you tomorrow, 11 a.m. British Standard Time, for our final session of the week. You can get in touch with us as well by Instagram or Telegram, preferably Telegram. That's the number. And students, as usual, make sure your Telegram is set to notifications so you can get signals and announcements. Take care, guys. See you tomorrow. Bye-bye.